Hello, we are here today, Women Educating Women, and we are talking about a topic called What You Don't Know, You Don't Know. And we're going to be coming at it from our different perspectives. So this time we're going to start with Tara Van Zant, our CPA. And what do you have to say on that topic, Tara?
I think one of the things that is so confusing to people, especially when they're looking for a CPA or a tax preparer or somebody to help with them with their accounting, is all the differences between all the various people out there and their certifications and their background. And so I just thought I would kind of give a quick synopsis of one of the major ones when you're looking for a tax preparer is there are CPAs and there are EAs, and then there are even people, just accounting professionals doing your that can do your taxes as well. EAs and CPAs both have tax experience, and EAs are basically certified by the IRS to prepare your taxes. They have good qualifications. It's just there's a difference kind of depending on what you're looking for. CPAs have basically a bachelor's degree, whereas EAs don't. So CPAs will have EAs normally don't. They don't have to have a certification. And CPAs have a 4-year degree, and then they go through basically a 4-part test that covers all different types of accounting. So it covers financial accounting, tax, business law, auditing, various things. And whereas EAs are very, very, very tax focused. So they have their certifications is in tax. They take one 3-part exam, and then the CPAs actually take a 4-part exam over a series of 18 months. So there's a little more testing with CPAs. It's a longer process. And then they're also required to have that bachelor's degree. And then accounting professionals can sometimes just have experience. They don't necessarily always have a certification. They'll just have, some experience in that. So it depends on what you're looking for and how complicated your taxes are, what other kinds of services you want. CPAs will be able to give you a kind of a wider breadth of experience as far as accounting, business law. They can kind of give you that wider, larger picture experience. But then EAs will a lot of times be very specialized in certain tax areas. So if you're looking for something really specialized, then that's also, a good option depending. And then that's also something to look for if you're dealing with something complicated. Estate and trust, foreign tax is also a complicated area, multi-state. There's all kinds of different areas, and it's important to find out what experience that person you're going to has. Attorneys are really good about saying what their specialty is, but CPAs aren't necessarily. So it's a good idea to ask what kind of experience they have in that area. I mean, a lot of times they'll tell you and say, I don't have that. I don't feel comfortable. Let me refer you to somebody else. But it's always a good idea to ask. And then the other thing that I thought was important is pricing, because that can be different going from one place to another. There's 2 methodologies usually that accounting firms use, and that's either hourly, so they will bill hourly, or they will bill per form. And so depending on, once again, on your type of return, one may be better for you than the other. So because if they bill you per form and your return is fairly simple, you might be paying more than you really need to. Or vice versa. If you have a really complicated form and your return and you're paying per form, it might be a better deal for you. Like I was talking about before, it's also the most important thing is to really make sure you have the right person. Price is not always the best factor. Make sure it's everything you need. Because it's like that saying, you get what you pay for. So
it gets down to that question of, is this an expense or is it an investment? Because right. Many times the investment may look like more, but right. When you look at the whole picture, it's not.
Exactly.
So, right. Okay, awesome. Well, thank you so much for sharing that. I had never heard it broken down into the three and the testing and all of that. So thank you, Tara. So we're going to go to Ava next. So Ava Carnival is not a state planner, financial planner. And so Ava, what do you have to share with us on the topic of what you don't know that you don't know?
So my topic is a little bit similar to Tara's. A lot of times in the financial services industry, many terms are thrown around and they think that they're interchangeable and they're not. So for example, an investment advisor and a financial advisor aren't the same thing. And you can have an asset manager, a planner, a wealth manager, a broker. They're all different. They're held to different standards and they are paid differently. So those are the two key factors that I want everyone to be aware of when they are talking about, oh, I have a broker. Oh, I have a financial advisor. Oh, I have an investment advisor. Well, which do you have? And how are they compensated? And what is their objective in the background? I am an investment advisor. I'm a registered investment advisor, which means that I had to take my Series 65 and I'm regulated by the SEC. The Series 65 is a requirement that you have to take before you can dispense your advice that you're giving and receive compensation for it. So as an investment advisor, it is my duty, I'm held to a different standard of care than, let's say, a financial advisor or a broker. Those two are interchangeable. The level of care that I am held to is called a fiduciary standard of care. And what that means is that I always have to put my client's interests first. And I know that that sounds so obvious, and you'd hope everyone is doing that, but legally, I am held to the standard of care of a fiduciary, meaning I have to do always what is in the best interest of my client, what is right for them, even if it doesn't benefit the firm in any way or benefit myself in any way. The opposite to that is maybe a financial advisor or a broker. They have to pass the Series 6 or the Series 7. They're regulated by the SEC and FINRA. When they pass that Series 6 and then Series 7, there are also other tests that they have to take as well. But that allows them to engage in online trading and place trades and then receive commissions based on those trades. So I have my Series 65 license and I can give advice and I can help select different investments, but I can't receive any commissions for placing trades between accounts. For a broker or a financial advisor, they can. My key takeaway would be just to ask and just to be sure that you know what type of an individual you're working with. There are needs for both, depending on your financial strategy and what you're looking to do with your portfolio. But just keep in mind that we are all compensated differently and we have different standards of care. The best way to find out is to ask your advisor, professional, whoever you're working with, your broker, if they are fee only. And if they're fee only, there's a definition that they have to abide by. And I wrote it down, that way we get it perfect. So if you're fee only, if and only if all of the compensation from all of the clients comes exclusively in the form of a fixed flat hourly percentage or performance-based fee. So there are no other dollars coming into that advisor or professional's pocket from commissions, revenue sharing, soft dollar movement, any sales related compensation. If they do have even just one client that receives that type of compensation from, then they cannot call themselves fee only. So I would just keep that in mind. Make sure you ask those questions because that isn't something people would know. People use the term, broker and advisor all interchangeably, but we are all in fact unique and different. So that is my key takeaway today.
Well, thank you for that. So you mentioned that the Series 6 or 7, the financial advisor / broker, they can place trades and get commissions. Is your company's fee then, or is a investment advisor's fee, is it a combination of, what is the compensation? I'm not clear on that.
So it's fee only. So we charge as a percentage of assets.
Okay, percent.
And then you're on that. But you could also have investment advisors that charge flat fees. There are some companies out there that are considered hybrid. So they're dual registered, meaning they consider themselves an investment advisor and a broker. But in that case, you can't call yourself fee only because you can still receive those commissions. But my firm, we are a registered investment advisory firm. So we are fee only, fiduciary standard of care, always best interest of the client.
Fantastic. Well, thank you for that.
Sure.
Good to know.
Yeah.
Also, who is managing your money? So
Sure.
from here, we will go with Sujin Kim, who is an estate planning attorney. And Sujin, what do people not know that they don't know?
So I think the people that I get to speak with, my prospective clients, they go into two groups. It's either the people who have no idea what estate planning is or what it does for them, or people who know everything about it, but it's usually incorrect. So I'll address what people think they know, but then they really don't know. So the first one is easy for you ladies because you've heard me say it, the difference between a will and a trust. A will is always probated. A trust, the assets held in a trust will avoid probate. So probate is that court supervised proceeding. It's where the court gets to step in and say your assets are worth this much and these are the beneficiaries who should take this much. In order for that process, we have statutory fees for attorneys who assist in that process. So a real property is always probated. So let's say the average home price in Sacramento is $500,000. So we have an average estate price of $500,000. The statutory attorney's fees for that $500,000 estate is $13,000. If you could get an estate plan in the Sacramento area, let's say for an average of $3,000. If you would have just paid for the estate planning, you would have paid the $3,000 and your family would have been able to take care of the distribution outside of court. But because you did not, then it goes to probate and then your family or your estate pays at least 4 times that amount for it to go through probate. And it's a very long process. The average probate is taking about 1 year to 3 years, depending on the complexity. That brings me to my next point of the preconception that estate planning is for a certain group of people. It's for the elderly. It's for after I've retired. It's for, I need to gather more stuff. I need more stuff in my estate for me to even create a trust. But that couldn't be the furthest from the truth because there is estate planning, a different kind of estate plan available for everybody. So let's say you're 25 and you've graduated from college, you're no longer on your parents' health benefits and you're a legitimate adult, you're working, not at the highest paying job you'll ever have, but you're still working and you're an adult. Your parents are no longer allowed to or have authority to contact your financial institution or your mortgage company or your healthcare provider and gain any kind of access to any accounts that you hold. So young people need to plan for their incapacity because what if there is a bad car accident or there is a mental illness that deems you unfit, not sound to make those legal decisions, then you have to have that safety net set up so that your parents, if they're the ones that are the best fit, that they can step in and make those decisions for you. And then there's the young families with young children. Well, you would need both of those, the durable power of attorney, the advanced healthcare directive to help in case of incapacity, but also they need a will because that's where you appoint legal guardianship for your minor children. And then you need the trust to pass the home to your children, avoiding probate. And then when those families grow up and now their children are grown and they don't need the legal guardianship portion of it anymore, but what if one of the children need a special needs trust because they have a mental illness or because they're receiving some kind of government benefits? There's lives, we all grow up and our children will grow up too, but our needs change and your estate planning should reflect those changes as well. So estate planning is for everybody. There is a certain type of estate planning specific for you, but that's what the attorney will advise you on. A will is always probated. Always, always, always probated. I just have a house. I just need a will. That's not the case. And probate is very expensive. Whoever is listening to this, watching this, if you could walk away with those 3 key takeaways, then I think that would be better for everybody.
Well, I love how you walked us through, even from that person, that 25-year-old, and why it's important at all stages of life. And so thank you for walking us through that. I am going to be speaking on the topic of buying and selling real estate. And I also have 3 points. And my first point is that the primary contract that is used in the state of California is drafted by the California Association of Realtors. What many people do not recognize is that that contract has a bias to protect buyers. And what that means is that a buyer has lots of ways to get out of that purchase agreement, but the seller only has one way to get out of that purchase agreement once they're in it, and that's on buyer non-performance. So one of the conversations that I have with sellers sometimes, if they get frustrated in the contract, they don't like the buyer that they chose, and they're like, I just want to get rid of this buyer and go with a new one. If they follow everything in the contract, you are stuck with them. Now, you can't be forced to sell your property, but you could be dealing with some legal issues because you did enter into a legally binding contract to sell. So just know that that bias is there when you're using the California Association of Realtors forms, which is the most common one. The second is that talking to home sellers, many times the main thing that a home seller is looking for is they just look at the price. I just want the highest price. The challenge is that the price is not the only thing that matters. Many times the people that offer the highest price have some contingency associated with that price. And so you might not want that contingency. For example, if you're looking to sell your home in a short period of time, you probably don't want to accept an offer that's contingent on someone having to sell their home in order to buy yours. Or they might ask you to pay for some of their closing costs. There's a variety of things that could come up that are outside of the fact, or perhaps the reason that they are offering you so much money. So home sellers, yes, you want to look at the price, but you don't want to just look at the price. You want to look at all of the terms, and hopefully your realtor is walking you through that. Which takes me to my third point, which is, what's the difference between a realtor and a salesperson and a broker? Our state agency that licenses us as real estate professionals, there are 2 types of licenses. There's either a salesperson's license or a broker's license. Someone who holds the salesperson license must hang their license under a broker. A broker can also choose to hang their license under another broker, but they can also operate independently. So if you have a salesperson that, like I say, they will have to hang their license under a broker. Now, what is a realtor then? Well, a realtor means that we belong to the National Association of Realtors, which means that we have a code of ethics that we have to follow. And we are held to a higher standard as realtors than someone who is not a realtor. So yes, the Department of Real Estate has jurisdiction over every real estate licensee, whether they are a salesperson or a broker. But when you have a realtor on top of it, there's an additional layer of standard that has to be met, and we can be disciplined from that national association as well. So from a professional perspective, all of the people that are on this call have professional associations or licensing that they're a part of. Real estate professionals are the same. And so it is important for you to recognize the difference between those various terms. So you've now heard about several things that you didn't know that you didn't know. And so hopefully this has been educational for you. If you have any questions from either of us, Sujin, myself, Tara, or Ava, then please do reach out to us. You will see our contact information at the conclusion of this presentation. We'll be coming back again next month, and we don't know what the topic is yet, but we will have a good one. So see you then. Bye-bye.